Let's talk about Apple, stock symbol AAPL. The stock has been on one heck of a move of late. Had some favorable news that came out of Washington that with the tariffs as it relates to China, that gave it a good boost on Friday, then followed by another really big upgrade. Today took the stock not only into positive territory on the year, but to new all-time highs. So let's go ahead, and what I want to do in this video is dissect the charts, the technical analysis on it, and just really try to determine what is the right approach with Apple right now. Should we be taking gains? Should we be adding to our positions? Should we be getting out of it, or should we be jumping into the stock? That's what we plan on talking about here. So let's go ahead and get started on that right now. Okay, when we pull up the Apple chart, what do we have here? First off, we have this rising trend line. This is an important trend line going all the way back to April, but it's not the only trend line that we need to be focused on. We also have a trend line going back to early August. Now, this trend line is a little bit messy on the downside. You can see when it pulled back from that sharp sell-off on Friday, October 10th. If you remember, this came from a post from the president about a trade war being reignited with China. The stock, like the rest of the market, had an incredible dip lower, but it managed to hold this rising trend line into the close. For the next week or so, it basically stayed right around it until Friday, when it became apparent that trade war wasn't going to continue. Apple got a good boost out of it, continued higher with that rally to all-time highs today from the upgrade. So now what you also have here on top of this short-term trend line, you also have a parallel channel. So right off the bat, the one thing that I would say is watch the resistance here on the upper channel band. So if it gets back up to this like 273, shouldn't say back up to because it's never been there before, but if it gets up to 273, about $11 away, a little under 5% in gains, that would be a pretty significant move. That would be a place where you definitely want to be taking some profits if you haven't done so already. But ideally, I would say if you got in pretty close to this lower channel band, then you're wanting to at least be taking some profits around this 263, 264 area, hoping that it can make another move up to this upper channel band in the 275, 276 area. Now, this is where it gets a little bit more interesting because we're going to go back a little further in time. And what we're dealing with here now is a much longer term trend line. This goes back to the 2020 lows. You can see where we've bounced off of it here in early 2023. And then we bounced off of it again in April when we had the whole liberation sell-off from the tariffs. Now, this upper channel band also comes in pretty clutch here because now we're going to have a much better idea of what potential this stock has going forward. So what is very possible is that, and I'll lower this chart here just a little bit. There we go. It may be that it gets back up to this 281 area where it's testing both the short-term upper channel band and the long-term upper channel band. And so that would be a really unique development because then if you get the pullback, and I would expect one at that point, then you're going to want to watch first this rising trend line, which would probably be around like 268 or so. And then if that breaks, and I'm not saying necessarily that it will, but if it did break, then you're going to want to watch this longer term trend line that goes back to April at around 236. Now, if it goes anywhere below that, we're probably dealing with a much bigger sell-off across the rest of the market. So unless there's a much bigger sell-off going on with the market, I wouldn't expect it to get further there. In fact, if the market remains bullish, I'm not so sure that it would even break below this lower channel band here. But if everything falls out from underneath the market, then where you would probably be looking at is a move back down to just below 200. I'm not saying that's the likelihood. I just want you to know the price levels. I want you to know what I'm looking at and the key levels to be aware of if the market pulls back. Because when we do get those pullbacks, and we do get them from time to time, they're not usually at a time of our choosing or when we ideally want it to happen or when we expect it to happen. So we have to be aware of those price levels that exist on these stocks so that when it does happen, you're not finding yourself unprepared to be able to take matters into your own hands. So that's really how I see the entire Apple chart. It's pretty basic, pretty simple. You don't really see any major key levels of support outside of this break here today. This would be an important level to watch going forward, this white line. It tested it back in early October, and then when it pulled back, it came back and pushed right through it with and with an incredible volume. See down here, there was a lot of volume here today on that breakout. So that's all good signs for the stock moving forward. And from a risk management standpoint, you have about $20 of downside that you're vulnerable to if it did start to pull back here and break back below this breakout level, because you want to be able to put your stop losses below key trade support, and there's really nothing close by outside of the previous lows. So what you want to see is if this thing pulls back to give you a new higher low that you can put your stop loss below, so you can raise that stop loss and be able to book more of the profits. Now remember, the thing you want to be very careful of is earnings coming up. Now, Apple isn't known for being an extremely volatile stock when it comes to its earnings. Yes, it can drop a few percentage points, but you never want to rule out the unexpected happening. And that's one of the big mantras in the market. You have to be willing to expect the unexpected. And in this case with Apple, while it doesn't have a huge history of very volatile earnings, that's always quite possible that something like that could happen. And so I'm not a big fan of holding my trades through earnings. And in this case, if I was in Apple, which I'm not in Apple at all in any capacity, if I was in it from a swing trading standpoint, I wouldn't want to be holding that through the earnings. In any case, I hope you enjoyed this video. And if you did, please make sure to like and subscribe, and let me know down in the comments below, what are your views? What is your take on Apple right now? Are you buying, holding, selling, getting into it? I'd love to hear from you guys on that matter. Thank you. And remember, Jesus Christ, he's the way, the truth, and the life. Nobody comes to the Father except through him. Thank you, and God bless.